But let's do it in total rather than just on a per unit basis. That's an outstanding question. I'll pose that to someone else and have them help you. Mr. Musgrave. She asked a very good and relevant question, and that is, when we are creating an income statement, should we be using units produced or units sold as the volume?
Units sold.
Units sold is correct. Okay. Is that helpful?
Yeah, so it's $10,000.
$10,000 for direct materials? I'll label it, and we'll keep track of all those. And you calculated $10,000 as 5,000 units sold times $2 a piece. Okay. So you all might want to make note of that. Okay. Mr. Montgomery, another number, please. Fixed costs. Where is my piece of paper here? How much? Is that not a fixed cost?
Yeah.
Maybe?
Yes, it is.
Yes, it is. So fixed, selling, and administrative. How much?
$10,000.
$10,000. Beautiful. Actually, we should note these, they're negative numbers, right? They're expenses. Okay. Davis, you're on.
Revenue?
Yeah, absolutely. That would have been the first one I would have picked on.
$100,000.
$100,000. How'd you calculate that?
Selling price per unit times units sold.
Okay. Beautiful, beautiful, beautiful. Matt Michael.
Do direct labor.
Okay, how much? Why the question mark in your voice?
I was going through.
Is that right? Jennifer says yes, so it must be right. Mr. McKee. Variable overhead. How much? Okay. Jennifer? Oh, question first. You got a moment to think about it. Tyson?
When you're doing direct labor,
Yes, sir.
they're 5,000 times 4. Is that what you're getting?
Yes.
So they're getting paid for every item that's sold?
In this case, yes. In this math, because that is the information that you're being given, cost of a unit. In this case, yes.
Okay.
I mean, it's probably not that their compensation structured, that the direct laborers are getting paid per unit. It's just on average, this is how much it costs in direct labor per unit. Okay. Although there are a few companies in the world where this is how they do pay their production employees. It's a welding company, a company that makes welders, good welders, whose name escapes me right now, that the manufacturing employees are paid per unit produced. Yes, ma'am, and then ma'am. So I'll get you.
Do you think this method is only going to go by what's been sold?
Always. Always. Income statements are based on what is sold.
Okay.
What was your question? I'm sorry? Selling price times 5,000 units. Is the selling price $20 per unit? Okay. And that would give you $100,000. Very good. Jennifer, did that give you enough time to, but I think you already had the answer.
Variable selling and
variable selling and administrative, $15,000. And now we can calculate contribution margin. Because we've got all the variable costs, do we not? I think we do. Whitney, have you calculated this? No, I haven't. Okay. 50,000? Yeah. Very good. See, you could do it in your head faster than you could calculate it.
That's why I turned it on, I put a one in, and I was like, wait, oh, even numbers.
Awesome. Is that worth an awesome possum? Okay, awesome possum. Because she did the math in her head. That's.
Are you always going to come to me for approval for that? Or?
You're the one who made such a big deal out of it. And it keeps you awake.
Don't worry about me.
It keeps you awake. Well, you're the one who said, you were concerned. You were concerned. You were concerned. Now what? Are we done? Kaylee, are we done? What do we need to do now? Does it take much figuring? So what number are we going to put up there? 30,000 units? Dollars? Well, now you can put a dollar sign on it. But see, it's a good habit to use dollar signs so you know. So what's operating income, Heidi? And you might not even need to use a calculator. How much? $10,000. See, calculations done in your head, to me, those are deserving of awesome possums.
Why is fixed overhead 30,000? It should be 25,000 if we're calculating it based off units sold.
Yeah, but fixed overhead is a standard, it's a fixed
But we
cost.
broke it down into units, and
But how many did you sell?
we sold 5,000 units. We made 6,000, so we broke it down into the costs for each of those. So why aren't we multiplying it by units sold rather than?
What you've just described perfectly is the calculation for the absorption costing income statement format. The 30,000 is just written out there. It's given to you inside parentheses. Fixed overhead, $30,000. I'm sorry?
So they're just showing you how they got the 5.
Yes, they are just showing you how to. But that number is important because we recognize fixed overhead in the period incurred on the variable costing income statement format. So we don't do any of these fancy calculations that you were trying to have us do. We just slap the number down. It's easy. And your calculation is precisely correct. That's where that number goes. Okay? Does that make sense? You don't like it though. You just like absorption costing method better than the variable costing method. It's just like a better color for you, if you will. But the variable costing income statement format's easier, right? You just take the $30,000, slap it down.